I need you to be very honest with yourself. The concepts that you've learned, the patterns that you know, the models that you've built, they're very inconsistent. They don't work all the time. What are some of the most common ones? AMD, the power of three: accumulation, manipulation, then distribution. You go into the market every day of the week looking for this pattern, and you're expecting Asia must consolidate, London must manipulate, New York must expand. You draw your fair value gap, price comes into it. Sometimes it bounces up, sometimes it blasts through it. And you keep asking yourself, am I the problem? Am I not applying it correctly? And on social media, every Tom, Dick, and Guru is telling you the problem is you, is your psychology, is your mentality, you are not patient, you're not consistent. And it's not true, because you actually apply the model the way it was taught. The problem is that social media influencers and teachers have glorified technical analysis. This is not what makes trading work. The concepts, the ideas are not the underlying reason that the market moves. As a trader, 90% of your job is simply determining whether I should buy or whether I should sell. And if you are looking for your pattern to tell you what to do, it's going to mislead you. Because if you go into the market not knowing what the market is supposed to do, and you are saying, if I see a consolidation and then I see the market trade below the consolidation, then I think it's about to do AMD and manipulate, and so you are buying because you have seen this pattern, the market can just break through it and take you out. Your job as a trader is understanding real market dynamics, why this market moves. And here's the kicker: you cannot rely on technical analysis and looking at your charts to determine where the market is going to go. Your results will be very inconsistent. Sometimes it will work, most of the time it won't work. And the problem is not you. The market moves for macroeconomic reasons, fundamental reasons, interest rates, what hedge funds and institutions think, the policies of government. That's why you see manual interventions. That's why the news moves the market. Your job as a trader is figuring out a way to determine what your bias on the market is outside of the charts. The charts then confirm your bias. That is why if you know that the market is supposed to go up, if you see the market accumulate and break out, you can buy the breakout. You don't sit down on your hand because you didn't see the manipulation. Stop glorifying these concepts and these models. They have when they work. When you're on the right side of the market, everything works. Impulse, consolidation, impulse, it works. Manipulation, impulse, it works. Consolidation, impulse, everything works when you're on the right side of the market. I've spent months figuring out how these markets move, where to actually look to do the analysis that tells you this week you need to be a buyer, today you need to be a buyer or a seller. That's the paradigm shift I'm trying to introduce to the trading community. Follow me on this journey. I'll be happy to help you. I'm Velos the Trader, and I'll talk to you later.